Right, so there seems to be a bounce in the markets, especially the S&P 500. Well, it's a small bounce from the big declines over the past few weeks. This includes the tech chart as well. So in Malaysia, we are experiencing a mini bounce as well. The past few days, the division has really surprised. I mean, too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. Seldom you see circuit breakers. I think there was a circuit breaker for them.
Is that?
I know they hit 36% in one day or something
They
like
just
that.
got questioned by Busa only.
Yeah,
That's about
UMA,
it.
right?
Yeah.
So Opstar, which has experienced big declines because of potential loss of customers. Suddenly now it has improved. PIE, I'm not so sure, but yeah, I guess they're going up as well.
Yeah. This is basically like some sort of like a tech rebound from the bottom. Okay, so you also need to know back in 2018, that was when Trump did the first tariff against China around February, March, right? They also have, after a decline, like a 7%-ish decline, they did a rebound, like a 9.87, let's call it 10%-ish. Temporarily only, this is only for like only for 5 months. Then after the 5 months, actually it dumped even more. So it dumped to 14.33%. The reason why it dumped obviously is because the trade tariff war kind of like escalated. More stuff is being imposed. That's why there is a major dump. So whether this will mimic at the current juncture, which is right now we are seeing some sort of rebound, probably you will like continue to rebound, but probably you need to like stay on hold because there's a lot of things that will be happening in the next few months, which is the tariff on April. So you can see that this is all the list of announcements already lah. So the next one will be EU, then major exporters, and then every single country, on food, on cars, on chip, on pharma. There's a lot of things that's going to be happening on April. And then after that, November is going to be on timber and lumber and also copper. Then in December, it's still undetermined. I mean, we still don't know what sort of things that is going to be happening. And on top of that, also, we haven't talked about the AI export chip, which they are still going through some sort of investigation with Singapore. And we don't know whether this will impact Malaysia or not, because we also have a company that is doing some sort of contract manufacturing for NVIDIA's chip. So that company is NationGate. So that also would be another thing to look out for in case like the bad things just happen. So yeah, tariff war is still not ended yet. There's still more. And if you want to know more about the entire summary of the Trumpianomics, this is basically the chart that is made by Mr. Tong in his The Age paid subscription. So if you want to know more on his thoughts about it, do read about it. But basically everything is just to make America great again. And how they do that is that they're going to cut expenses with Doge. They're trying to get more revenue from tariff. And in turn, it kind of can help them to lower taxes for the people in working in the US. And also, they are trying to find ways to increase more investment in the USA. Basically, they are just trying to create more job opportunities in the US, cut expenses, and reduce the trade deficit. That is basically their goal.
And then one thing that's not here as well, I mean, or rather briefly is here, is the interest payments on their debt.
Yes, exactly. Yeah, they have a huge pile.
In fact, that is the main motivation I sense from Elon Musk running Doge, which is, we're going to go bankrupt. So we need to start cutting people.
Yes, exactly. Okay, so this is the entire picture for you to see. Then the potential outcome, obviously, because of Doge, probably there will be a rise in unemployment. We still don't know whether this will affect the unemployment rate or not, because this is coming from the, most likely internally, the government side, that they're going to be cutting some people away. The second, obviously, there will be slow economic growth, because this is some sort of like a cleaning phase for US to clean whatever junk they are having right now. And in hope, with the slow economic growth, it can actually reduce interest rate when actually inflation.
So that's what Tong is predicting, Mr. Tong.
This one is basically, exactly, that's what he's predicting. And then the third one, obviously, is the uplifting or sanction of Russia, because there's like talks with Ukraine and Russia, right? They want to like stop the war. So definitely Russian will like give some sort of like condition on the US. So probably that they will start to uplift some sanctions, which is probably going to be linking towards the energy sector. So yeah, Russia can kind of export some, or the US can buy oil and gas from Russia. Now the last one is that This one is not from Tong. This one is basically our general view is probably the US may lose in the short term, but in the end also everyone will kind of like lose.
Yeah, so basically the trade deficit is, yes, it's a benefit to the world, but it's also a big benefit to the US. Whenever a country experiences a trade deficit, what it usually means is that your ability to consume is far greater than the other person.
Yeah.
Right? So take Malaysia's case. We also run a trade deficit, well, in our case, a trade surplus versus the US. We have that surplus with the US is because we know people in the US can spend more than people in Malaysia, right? So that I think is Trump's maybe his error or his different way of looking at things, where he doesn't realize that actually the trade deficit is proof that the US consumer is going to be strong. So with the cutting of maybe some federal government agents, officers or whatnot, yes, there'll be some employment issues there. The whole thing is, will the shift or reshoring of manufacturing jobs back to the US, the jobs gain there will offset some of the jobs being lost? Because what happens now is we can expect the US dollar to weaken and US consumers to spend a bit less because it might be because if the USD weakens, then
they have
anything
less power.
coming in, so that has always been a problem with China, right? Because they don't have a strong consumer market, or at least nowhere near the US. And I mean, as a whole, it looks big because there's it's a big economy, but Chinese consumption is like 30 to 40, I think about 30% of the economy. Right now, the economy is about 18 trillion. So you're looking at, let's say, 8 trillion of consumption, right? But the US economy is closer to 25 trillion, but the consumption level is about 70%. So 25 times 0.7, what's that, right? That is 17 trillion. So 17 trillion versus 8 trillion, right? They're almost, they're more than double.
Now, the second thing that is interesting, this one is quite recent, so which is Mar-a-Lago Accord.
So it's basically trying to refinance.
Yes, exactly.
This is basically what it's trying to do, right?
Yes, yep.
We usually have 30 years is the maximum, right?
Yes.
US Treasury, so now you want 100.
Yeah,
non-tradable
zero coupon bond. So you are not getting paid. It's basically like a very
sukuk. It's a perpetual sukuk.
It's worse than sukuk because you're not getting paid any interest.
Yeah.
So it's like a worthless bond, But yeah, so basically what he's trying to do is to force the bond holders, in this case, Japan and China, because they are the one that's holding the most, to sell. And then in hope, they will try to like convert their UST to US dollar holdings, and then they will also convert back to their own local currency. So that kind of like cancels off everything and where the USD will no longer be overvalued and somewhat will be weakening. Basically this is what Trump wants. They want a weakening.
Yeah, so
US
basically
dollar.
he wants a first world country to go back into more of a developing economy status. But then on the flip side, China is wants to become first world. But then what they're trying to do in China right now is doesn't seem to be pushing that direction. So it's very interesting.
Yeah, it's like totally different direction of where things going. But at least it will help with the debt law in some way. Yep. Okay. Now another thing which is you need to know, the true inflation for the US inflation index is right now propping up a little bit. So yeah, this I need to watch out for, but it is still like around 1.67%. So this is still quite not so bad. Yeah. Another problem, which is the US home buyers, they cannot really buy any homes, obviously, because the interest rate is so high. Right now, I think it's around like 6.5% interest rate for the mortgage. So there is going to be a more rise in terms of homeless population in America, which is quite bad. I think that's also the reason why they want to create more job opportunity for these kind of like people so that they can come back, be more productive, and then eventually it would like help to bring back some money to the economy and obviously make the people who's homeless to have homes. But you can see that the also number of existing homes sales is right now similar level to 2008. So yeah, this is a concerning factor also, that the US people are kind of like facing another problem. Okay, so this one is another recession fear. Quite interesting to see that poly market, which is the retail segment, and also JP
It's
Morgan.
like a betting.
Yeah, it's a betting site.
site.
Yeah, they're all predicting like there's a 40% chance of a US recession in 2025. JP Morgan, they thought it's 30%, but they bump it up 40% in March. And then they think that it will be like a 50% or above if, let's say, there will be a reciprocal tariff that is going to be imposed on April 2025. So that's also another volatility in the market for the next month that you need to anticipate. Also, another thing, which is the Google recession, it hit at a high. There was one point, it's like 100, I think 100 points for interest. And then this is like almost similar level to COVID level. This is the 2022's dump and also the COVID level. So yeah, there's some sort of like fear around in the market. As for Malaysia, I mean, we are still fine, but obviously there will be some sort of inflationary effect is going to be happening. So water bills is going to be increasing 30%. This is very sad. Number two is electricity, 14%. But this one is more towards the T15 people, the one that consume most electricity. And then on top of that, you also have the removal for RON 95 subsidy. This is also another for T15. So overall, obviously the T15 might be consuming less, which potentially means will be lesser revenue in a way for the government. Okay, so final thoughts about all of this is that the rebound right now you can see is obviously the market is already kind of like used to the scare tactic already. So because nothing's concrete, right? That's why they think that, whatever Trump say, he's not going to do it. Yeah, but then when he does it, I think the market will react the opposite. The second one, which is Mar-a-Lago, he's smart in this way that he is using this alternative to actually refinance the debt. And also it is to make things that is going to be, inflationary to be not so inflationary by having like weaker USD and also to encourage more exports than actually imports. They are making their exports more cheaper in a way. So yeah, Trump is actually quite a smart man to do all of this in such a short amount of time, and also he can think of all of these alternatives. The third one is a recovery will only happen when actually trade war or tariffs start to de-escalate. Yeah, this happened in the December 2019. So if you see back the chart, right, let me check the chart. Yeah, so you see after it dumped, then there was a rally. The reason why it rallied is because that is a point where the China actually agreed to pay some sort of like a tariff back to the US. Like they signed like an agreement with that. And also on top of that, that is where the US start to cut interest rate a little bit more. Yeah. So yeah, when you see like those kind of signs, that is where the market will start to recover. And as we can see from the previous times where they did that. The last one is obviously right now, although there's a market rebound, but there's still a lot of uncertainty and volatility. So I think the best way to actually to stay invested is to stay into these defensive stock. And defensive stock, we mean that companies that obviously has good business prospect, and on top of that, they can pay dividends. So this is actually a report done by CIMB. And basically, if you want to find like whatever high dividend yield that you want to look for, well, these are all the names. But of course, we don't really agree most of the names because you can see Balto. It is one.
But it's just a reference for you
only.
to see.
Yeah, correct. To start your search on what to look for a high dividend yield.
Oh, of course, you can try Fire Pro, right, where we pinpoint what companies we think have the greatest potential to withstand this current recession. This is a program designed to speed up your research journey using write-ups, using our community, where we share ideas, right? And we help each other out. If you want to get a taste of what it is, just hang out in the comment section on the description where you can find a free sample link. And reminder, viewers only get 10% off Fire Pro. Just key in the coupon code. And I'll see you in the next video. Bye-bye.